Chinese tech giant Alibaba reports a sharp drop in its first quarter on-year profit despite strong AI demand fueling growth in its cloud business. Not topping profits, though, was continued heavy investment into AI infrastructure. Alibaba's reported net income $3 billion for the April to June period. That's a 38% on-year drop in US dollar terms. Quarterly revenue rising 15% to $40 billion, also in US dollars. Shares in New York losing ground in pre-market trade after this result. Alibaba's earnings coming as demand for AI-related products continue to fuel Chinese export growth. High-tech exports surging 53% on year in July, a bright spot amidst slower domestic consumption. A day after a blockbuster stock market debut, Unitree shares trading more than 19% down by the close, but still more than 4 times above its strike price. The humanoid robot makers CEO saying the industry could be 2 to 3 years away from a tipping point, or so-called Chat GPT movement.
所以我希望就是未来快的话可能2到3年，慢的话5年或者10年的时间，就真正如果哪一天大家能看到把一台机器人带到一个你的任意的一个陌生环境，带到你的家庭，它基本可以实现80%左右的任务，我觉得就差不多已经实现了具身智能确立时刻，这就是未来真正产业的一个临界的爆发点。
And we're joined by Lorraine Tan, Director of Equity Research at Asia Morningstar. Lorraine, we look at Unitree, what happened today, but let's take a step back to Alibaba. So revenue for the second quarter up 9% against a projection for 8.4%, but profits down 76%. A reminder, last quarter's profit was down even more than that. Are you disappointed or are you pleasantly surprised?
I think it is pretty mixed in a sense that you saw decent revenue coming in from the cloud, the AI side, as well as the quick commerce side, which is their fast delivery channel. But all that sort of was offset by this increased spending, and therefore losses related to that ate into their overall profit. Overall, I would say first quarter earnings is probably on the profit side a little bit soft, so we wouldn't be surprised to see some disappointment creeping through. As you saw, the share initial reaction is negative, so that means that there is a risk that people are looking at slightly lower earnings for the whole year.
Investors or markets certainly would be factoring in the need for heavy capital spending in the hope or perhaps the expectation that the returns in the longer term would justify spending that we are seeing now. We've had several quarters of this. Do we see further justification for this high expectation?
Yeah, I think that with the growth that you're seeing on the revenue side, that definitely means that demand is there. I mean, there could be a couple of reasons why the costs were higher than expected. One of that obviously is the jump in chip prices that we've been seeing. So all this should start to filter through and to normalize. And once sort of the growth or demand sort of tapers or rather stabilizes or normalizes at some stage, and Alibaba doesn't see the need to spend as much as they have been doing in infrastructure, so all that is catching up, you should start to see profit levels start to rise. We've seen this before. We've seen this with, let's say, for example, Amazon in the past when it was starting its business. It spent many years trying to build the infrastructure for its online channels. And so once it gained the scale or some leverage point and it was able to reduce that spend, we started to see the profits come through. So we sort of anticipate the same sort of event to happen with a lot of the AI agents as well, although we note that it's actually very competitive as well.
All right. We're looking at competition. So Alibaba, this spend, whether or not we see justification eventually, we can compare that to Tencent and Baidu. Not great results for either as well, but reason more for Alibaba to have more hope than, say, compared to Tencent or Baidu.
Yeah, so let's just say that Tencent was a little bit later to the developing or spending on the AI front. I think they sort of waited for a while to see whether they could work with partners and then decided that they would go in. I think in both cases, let's say particularly Alibaba and Tencent, they do have very broad, decent core businesses and cash flows from existing businesses that will support a lot of the spending. It's just that for the I think for the near term, it does eat into their earnings growth. The fact that they're spending this money and they're not getting any returns from it in the near term. But if I look at Tencent, it's going to be able to monetize that at some stage, given the basically the network that it has through WeChat, for example. So we do anticipate that ultimately it will benefit as well.
In fact, Alibaba's results may not be so bad if we consider the larger picture in China. So retail sales for July rising just 0.6% against a forecast for 1.5% growth. So that environment is not conducive. And Alibaba is a big e-commerce giant as well. If retail sentiment is poor, that would mean Alibaba not profiting in that area as well.
I think yes, consumer confidence has been weak in China. I think that means that the spending has been particularly soft as well. So yes, that creates pressure for all companies that are trying to sell goods. Alibaba no different. But there has been a fair bit of the fact that Alibaba had the largest market share in e-commerce, let's say, is beginning they lost that market share to Pinduoduo, for example, to PDD. So what is happening now is it's also competing with Meituan on the fast delivery or the quick commerce channel. But because of the strength and scale that it has, I think Alibaba has actually been able to do a very good job in competing on that front. So while we saw traditional e-commerce lose ground, it was partly made up by better growth on the quick commerce side, on its other activities, as well as on the AI side.
All right, Alibaba as a full stack capacity, if you could quickly explain that for us and why that puts it more likely to be profitable, at least in the longer term. Final question, Ms. Tan.
Yeah, so basically it's already got a very big distribution channel. It's already in, Alipay, the e-commerce business. It's got basically a reach that it can depend on in terms of delivering solutions to wide channel merchants and to consumers. So it's going to be able to use some of that to offset costs on its end as well. But I think also because it's been a relatively early starter in its AI agent, McEwen, it's actually probably gotten a little bit better traction than some others. So we've seen, for example, in the US, we've seen Anthropic do well in terms of its enterprise business. We see Alphabet, Gemini also taking off well, giving its the structure that it has. So we sort of expect to see Alibaba continue to win in terms of this area.
Like that, Lorraine Tan, the Director of Equity Research at Asia Morningstar, speaking to us from Singapore.